Which are the three real estate investment trusts, the best that you should have in a portfolio? In this week's video, I'm going to discuss about one that I have in my portfolio in the last 25 years. And that is CAPITALAND Integrated Commercial Trust. It was the first prima donna REIT that listed in 2002, and it still remains good despite new listings in the IPO market for real estate investment trusts. Look at NTT, it bombed, and look at a few others, it is being like a bicycle. But what makes CAPITALAND Integrated Commercial Trust a standout? Probably one of the top 3 REITs in my portfolio for the last 25 years. Look no further. In this week's video, we're going to delve into one, the fundamentals. When the 3 key criteria is 1, asset or security selection, 2, market timing, and 3, asset allocation. This, in CFA, is the hallmark of making millions in real estate. Selling book that I have written and continues to be a bestseller. Do get one and read it, because on chapter 9, I share essentially how I made millions on real estate investment trust, which I reckon that you can also do so. Let's look at the last 5 years' performance of CAPITALAND Integrated Commercial Trust. Unlike most other REITs, there are about 40 REITs listed in Singapore, and most have underperformed, particularly in the last 6 years. But what makes CAPITALAND Integrated Commercial Trust so special? The average performance in the last 5 years averages about 8+%. But if you manage to catch it at below 175 in 20, well, just 2 years ago, and right now at 239, you are up a fantastic 26%. And that's what we teach in our investment class, the next of which is on the 19th of May. Back to CAPITALAND Integrated Commercial Trust. What makes it so special? Well, there are 3 criteria. Amongst real estate investment trusts in Singapore, CAPITALAND Integrated Commercial Trust is rather special in all aspects. That is, total revenue metric, distributable income, and net property income is one of the rare that in the last 5 years has continued to deliver a gradual, steady increase. Most investors and traders looking for real estate investment trusts gravitate towards gradual, steady return, not those that promise or give you big promises like how many assets they're going to acquire, only to realize that they fall flat on the ground when market situation changes. Look no further, look at the US office real estate investment trusts that has been listed, the likes of Prime REIT, the like of Capital Old, and the like of Manulife. They practically crash and burn. Do you reckon that they will recover? Let me know in the comments below. Because it's long suffering and investors have lost tons of money. That's why if you look at the average of real estate investment trust in the last 5 years, it has underperformed substantially, with the exception, one of the rare exceptions, CAPITALAND Integrated Commercial Trust. As you're aware, the loan covenants should not exceed 50% for real estate investment trusts listed in Singapore. But generally, most investors will already start to penalize many of the real estate investment trusts if their gearing goes above 40%, despite the MAS requirement of 50%. Generally, therefore, it tells you that people who gravitate towards real estate investment trusts want the stable, conservative REITs that look after investors. So if you look at CAPITALAND Integrated Commercial Trust, one of the key things that stand out is debt maturity. You can see that between now until the next 10 years, they have loans expiring, which means also that banks are willing to lend to real estate investment trusts like CAPITALAND Integrated Commercial Trust because they have faith that this debt will be repaid or refinanced. But more importantly, for us investors, we look at the cost of funds that CAPITALAND Integrated Commercial Trust is able to fetch. That's in the region of 3.3% on an average. Well, compare this to other REITs with longer maturity. Well, in the first place, there are not many REITs in Singapore that have a 10-year debt maturity profile, because most banks, like it or not, with MAS probing and SGX urging, are not able to get 10-year loans for their debt refinancing. And CAPITALAND Integrated Commercial Trust is one of the rare ones. And that's why the long debt to maturity helps in the financial planning and is key, therefore, in acquisitions, which is another lifeblood of real estate investment trusts that many people may have failed to incorporate into their analysis. It must have dawned upon you now, ladies and gentlemen, that when it comes to real estate investment trust, the choice of having which REIT to trade and which REIT to invest and to hold is key in making money in your investments. So another criteria that one should be looking at is the fact that real estate investment trusts are able to deliver higher DPU if you have higher reversionary rentals for its upcoming leases filtering down to the bottom line. And that's what the second trait that we look for in real estate investment trusts. And CAPITALAND Integrated Commercial Trust has been able to deliver that the portfolio lease profile expiry extends to beyond 2031. That is 6 years from now. So you can see that in terms of expiring leases, it's 6 years, but the bulk is going to renew in the next 1, 2, 3 years, up to 2028. That's roughly 60% of the leases, both in the hot office sector that it operates in, as well in the steady retail sector that it operates in. Now, this speaks volumes because both sectors, retail and offices, are showing upward reversionary rentals as you go along. It has been the case for the last 2.5 years, and is expected to remain the case for the next 2.5 years, according to industry reports on reversionary rentals because of scarcity, as well as the premium space that CAPITALAND Integrated Commercial Trust owns, that a lot of tenants are gravitating towards. Yes, ladies and gentlemen, that was my video on my GCP Global classes, the next of which is on the 16th of May. Yes, we have a lot of family offices, index fund managers, as well as high net worth individuals that actually join us in our classes. So this is actually just a good snapshot of the kind of people you meet in class, because these are intelligentsia raised from $1.75 when we bought it to above 250. We told our investors that it was time to take profit. And you can see, that in this case, it was distinctive, because if you look at the red bar, the long bar over there, it engulfs the previous 2 sessions when the price of CAPITALAND Integrated Commercial Trust was above 250, which was in February. And that's why we told our investors in our last class in February, just before the war, to take profits above 250. And look down further, look at the charts. Since we take profit above 250, you can see that the price basically has fallen down to below 230. And let me share with you my 2 trades that I did. Okay, one was actually on the 6th of February, where I sold 100,000 shares. And I took back $246,882. The second one was on 9th of February, where I sold 20,000 at 248, also taking back 49,568. Yes, I took back almost 300,000, selling close to 250. Of course, nobody can sell at a high, on CAPITALAND Integrated Commercial Trust. And look no further, because when it fell below 230, as I've told many of investors, in our class, it's time to get back. And true enough, if you look at essentially the pattern on CapitaLand, when it did a reversal thumbtack, technical pattern, as we just saw, towards the end of April, that means towards the end of the ceasefire. In my previous videos, I've told you that and shared that a ceasefire is a high possibility. Do look at my past video. And of course, below 230, as in this case, on the 25th of March, you can see on my personal trade side, I bought back by even more. So you can see and calculate that essentially when the price lands at 239 as of Friday, you can calculate how much profits I'm sitting on. That's the reason why, ladies and gentlemen, CapitaLand Integrated Commercial Trust remains a core trading real estate investment trust in my portfolio, because if you buy presently, you can make a reasonably good profit in a very short period of time. If you get it wrong, you do know that you are actually getting into a good REIT or real estate investment trust with solid fundamentals, financials, and it's a matter of time before the prices starts to move out. But of course, everybody wants to buy presently at the right timing, where the engulfing chart pattern tells you a reversal at the top, as you can see from that previous chart. And what prompts me the reversal thumbtack to buy back at 230 and below, as I've shared in our personal trade, is that. So if you want to have a more prescient call, remember, in making money, in making your millions in real estate investment trusts and investments, security selection, in this case CapitaLand Integrated Commercial Trust, market timing, in this case knowing when the technicals change, together with volume studies which we will share in our investment class, and asset allocation are the key things helping you to make and multiply your minutes. So till next week, but if you feel that you want to join us and get more prescient timing, correct better selection for your securities like in technology, AI, cybersecurity, to join us for our class on 16th of May. Till then,